Now, for decades, Chinese families have treated property as their safest path to building wealth. But with the real estate market struggling, many households are now holding more cash and making cautious moves into stocks and other financial assets. The shift marks a major change in how Chinese families manage their money, as traditional investment options become less attractive. For years, buying a home was considered the preferred way for Chinese families to grow their wealth, but a prolonged property downturn has changed investor behavior now. Instead of putting money into apartments and housing projects, many families are instead choosing safer options like bank deposits. Some are even slowly returning to stock markets. China's household wealth has historically been heavily tied to real estate, but falling property confidence has pushed investors to look for alternatives. The biggest reason is the crisis in China's housing sector. After years of rapid growth, the property market entered a prolonged slowdown, hurting confidence among buyers and investors. For many families, homes were not just places to live, they were their biggest financial assets. Now, with fewer people willing to buy additional properties, households are keeping more money in cash and deposits. Chinese households are now cautiously exploring the stock market. The move is not a full shift away from property overnight, but a search for new places to invest savings. Lower returns from traditional savings products and uncertainty around housing have encouraged some investors to consider equities, mutual funds and other financial products. China has one of the world's largest pools of household savings. Estimates show Chinese savers hold nearly $30 trillion, creating enormous potential buying power if even a portion moves into financial markets. Analysts say this shift could provide support to China's stock market, but investor confidence remains fragile because of concerns around economic growth and the property sector. The challenge for Beijing is encouraging families to spend and invest again. A stronger stock market could help rebuild confidence, but households remain cautious after years of uncertainty in real estate. The change reflects a deeper shift from a generation that relied on housing to build wealth to one looking for safer and more diversified options. China's families are not abandoning property completely, but their investment priorities are changing. As real estate loses its place as the country's favorite wealth building tool, cash and cautious stock bets are becoming the new alternatives.